the group briefly with a few thoughts on both regional issues and maybe open it up for some discussions. And I sat and just thought about some of the things that are on our mind anyway. Obviously, Fujairah has developed incredibly quickly over the past few years. By my count, and it's a very rapid changing picture, by the time that the current projects are completed that are under construction now, Fujairah is going to have about 8.7 million tons of storage, and that is projected to grow up to 10 million tons of storage in the very near future, in the next few years. On the back of that, the port infrastructure has been growing rapidly to handle the increasing traffic that has been coming through this area. And that changes the dynamics of the region a lot. It puts Fujairah on par with the commodity centers that we all grew up with and knew so well. Tulsa, Oklahoma, which is the clearing point for WTI, the Singapore storage market, which has historically grown to be one of the large trading hubs, and obviously with ARA. So that is a huge transformational change. What happens with that? Well, right now we have over 1.2 million barrels of incremental refining capacity coming online. 400,000 barrels a day refinery has started up this year. 2 additional refineries, one in Saudi and one in Abu Dhabi, are in hot commissioning right now. That will change the product balances in the region quite considerably. It will continue to put pressure on Fujairah as a blending storage distribution hub in the area. The economic growth in the region continues to be solid. The issues continue to grow in terms of the geopolitical dynamics of the area, and the growth from incremental capacity, for example, the Jizan refinery, refineries in Kuwait, expansions in Oman, new refineries in Oman, and a refinery that has been long discussed here in Fujairah itself will also continue to change the balances. But what is sure for this region anyway, Fujairah has established itself as a key trading hub and is matching that of other global trading hubs in the world. On a more macro basis, we're operating in an environment of oil prices having fallen in excess of 15% year to date. Some economic uncertainty, Russia and Ukraine tensions, regional tensions, China, lots of different numbers on growth, but maybe one element of secondary data that maybe hasn't been discussed as much is that power demand actually for the first time went negative in August in China, and the economic growth has been the slowest it's been at least since 2008. That in a backdrop where globally over 30 countries list China as their largest trading partner. Economic quagmire in Europe, is it set to continue? Quantitative easing in the US, it's coming to an end, or at least it seems to be projected that way, yet in Europe it's possibly just starting. So we have a mixed energy picture. We have LNG and coal demand both down and seemingly in abundant supply, a crude market that continues to trade down. Let's see what happens today, but yesterday was another significant down day. And to top it all off, uncertainty on the winter. As we know, the winter in the US last year was particularly severe. It took gas levels, gas inventories down to basically near empty, and they've been building rapidly since. But in Northwest Europe and Asia, the winter was actually quite mild, which severely affected demand. So with that backdrop, plenty of uncertainty, and I certainly think plenty to discuss today. Thank you very much.